What is going on, DeRosa Insiders community and everyone watching? This is Matt Faircloth, and welcome to the Cash Flow Digest program. My name is Matt. Our company is called the DeRosa Group, and we are a real estate company dedicated to transforming lives through real estate. Okay, guys, we're going to talk a little bit about this guest. This is a phenomenal guest that I didn't know growing up, but we grew up about, maybe a half mile from each other, and that's just kind of one of those weird things. I kind of grew up in the same environment, and knew a lot of the same geographies growing up and everything. And we've been in a lot of the same circles, know a lot of the same people. I hold this person in super high regard. And he's also done a lot of investing in things, not just multifamily. He definitely runs a very successful multifamily company. But we're going to talk about all kinds of investing vehicles, including the one that I want to just pick his brain only because it's fun, not because any of you guys should do it. And he'll tell you all about why y'all shouldn't do this. But that is investing in racehorses. We're going to talk about that and many, many other things. Let me bring in our guest of the day, Jay Scott. How are you, man?
Hey, how's it going?
Fantastic, man. How are you?
Great. Love that intro.
Tell us a bit about how you got your way into horse racing. How did this happen? Intentionally, unintentionally?
Yeah, so I've been a fan of horse racing since I was a kid. You and I grew up not too far from each other. I grew up walking distance to Pimlico Racecourse in Baltimore, which is the home of the Preakness. So I used to on the weekends, not that I never skipped school, course, but on the weekends, my friends and I would go to the race course and watch the horse races. Every year during Preakness, we'd go to Preakness and sit on the infield, and so I was always enthralled with horse racing. I liked the math part of it. My friends were degenerate gamblers. I was just like, I love trying to figure out the math and the odds and seeing if we could get like some advantage over the odds makers in certain situations
and hack the odds.
Right. I was never tremendously successful at it, but I loved it, and so I used to love going to horse races. 2017-ish, my kids were in elementary school, and they had some friends, and we met the parents of one of their friends. And the dad he's a tech guy as well. And I found out that he owns racehorses. And I always thought, wow, how do you just own racehorses? That's crazy. Yeah. And so he started to explain the process to me. And I just mentioned off the cuff, well, if you're ever looking to invest in a new racehorse, let me know. I'd love to come in and partner with you. And a couple months later, he calls me up. He goes, "You want to buy a racehorse?" I was like, "Really?" I said, "Yep. Here's what you need to do, and it's basically wire me some money." And I said, "Okay, let's take a chance, so just a leap of faith." And I bought a racehorse with him, and I got pretty involved in the process of owning the racehorse and watching the horse race. And then he wanted to buy another horse, and so we bought another horse. And then he wanted to buy another horse, and we bought another horse. And then he was like, "Let's put together a partnership. I have some other friends that want to buy horses as well." And I said, "Okay, I know how to manage partnerships. I know how to manage syndications. Let's formalize this." And we created a joint venture. And now there are 5 of us who invest in the joint venture. We own 14 horses. And we've got horses pretty much all over the country running races at various tracks. And the sad thing is, I used to live in Maryland, and I wasn't too far from Laurel Racetrack and Pimlico Racetrack, and that's where a lot of our horses were, which was great. The kids and I could go visit the horses on the weekends, and
that's my horse.
That's my horse, and literally we got to know the horses, and the horses got to know us, and we could be behind the scenes, like in the paddock when they're getting ready to race. If they won, we'd be in the winner's circle. We knew all the jockeys, we knew all the trainers, a lot of the big names in the horse world we've gotten to know. So it's been pretty cool. And so I can talk about the good and the bad of horse racing, but we're pretty well invested in it now. We've won a couple of big races. We've had our share of setbacks as well. And so, yeah.
Did Helms Deep ran at Preakness?
So Helms Deep ran the race right before Preakness. So Preakness was race 12 or 13. Helms Deep ran in a stakes race, the race immediately preceding it. And he did not do well. Well, I shouldn't say that. If you look at the results, he did not do well, but he was leading the field for the first 80% of the race. But he was an underdog. It was a long distance for him. We didn't expect that he could keep that pace the whole race, but we told the jockey basically.
Were you just heart in your throat the whole time when he was in the lead 80% of the time, or just please hang in there, buddy? What?
Sort of, except that we know the sport well enough, and we know our horses well enough that we knew that was the most likely outcome, that he was going to lead the race for the first 80, because we talked to the jockey beforehand, and you strategize. Just like for any investment you make, for any deal you do, you have a business plan. And the business plan on this one was the horse was going to run hard for the beginning of the race to get a lead and hope that the horse could maintain that lead and have enough energy to finish out the race, though we knew that the pace that horse we were going to put him on would probably tire at around 75 or 80% of the race. And that's exactly what
you
happened.
just figured like, let him go sprint out,
Exactly.
and maybe he maintains it.
Exactly.
And that's just how that horse is. He's a
Yep.
sprinter. Okay.
Yep.
Yeah. Huh. That's
And so
interesting.
it was an exciting
Um,
race.
yeah. Do you recommend? I've talked to you about this before. Is there a way to make like reasonable returns on horse racing? Is it something, or horse ownership? Is it something that you figured out a way to create some sort of a passive income from, or is it something where it's just a more of a hobby than anything else?
Yeah, so let's talk about in general what horse racing involves, or owning horses or racehorses involves. I actually like to use real estate as a good analogy for racehorses. So
Yeah.
there are a few different ways to invest in real estate. You can develop it. I mean, you can build ground up. You can do what's called value add, which means you buy a distressed asset like a rundown house or a distressed apartment complex, and you add value. You renovate it, you improve management, and you increase the value. Or third, you can buy what's called a stabilized asset. Basically, you're buying a house that's perfectly good, or an apartment complex that's perfectly good, and you're just generating cash flow from it month after month. And you can do the same exact thing in horse racing. On the most common thing to do is what we call the value add model, which is you buy a horse that you think you can improve. You can train it better, you can feed it better, you can house it better, you can treat it better, you can give it better veterinary care, and you can
Hmm.
improve how fast the horse runs or how consistently the horse runs. So it very much is it's similar to buying a flip property or an undervalued apartment complex. You're buying a horse with the intent of making it a better racing horse and making money from its racing. Number two,
Hmm.
you can buy a horse and you can breed it. So you can have that horse basically produce foals, baby horses that you then keep for a couple years and you start racing it. So that's the equivalent of new construction. And then third, you can buy a horse that's already a good racing horse that's winning consistently, where you know if you pay a reasonable amount for it, it's just going to keep running every 2 or 3 or 4 weeks, and you're just going to generate a little bit of cash flow from the horse winning races every few weeks or every few months. And so
Yeah.
we tend to focus on the value add. We buy horses either at auction or horses out of other races where we think that horse could perform better. We have the ability to make that horse a better racehorse. And so we'll buy that horse, we'll put it into, we'll train it. We have a trainer or a couple trainers that work with the horses. We'll put them into harder races that generate higher paydays. And if we can successfully make them better racehorses and they can win more races or higher priced races, we make money. And so we do very
Hmm.
much what we do in the real estate world, but with horses.
Hmm. Yeah. Interesting. Interesting. Is it a investment for the faint of heart, or is it something that you think is scalable, or is it for fun or for cash flow for making money? Which one would you recommend for people that are even thinking about it right
Yeah, let me start with, I talked earlier about real estate is more, you can make a single investment and you'll probably do pretty well because there's low variance on the results in real estate. Business investments, you're going to have 90% failure rate and you hope that the 10% is so successful that it wipes out the losses from the 90%. Horse racing is somewhere in between. Every horse you
now?
buy is not going to be successful. You can't just buy one horse. I mean, you can, but it's unlikely you're going to buy one horse and make lots of money. It has to be a portfolio play. You have to buy a bunch of horses, but you're not going to have a 90% failure rate. Most horses are basically going to break even. The amount you're
Mm.
spending every month to feed them, to house them, to train them, to take care of them, their veterinary costs, to transport them to races and back and forth from the barn to the races, all of that, most horses you're about going to break even with the amount of money that they make. And your hope is that you
Yeah.
have one or two horses that go on to run really big races and make a lot of money, and they will cancel out the horses that do
Right.
worse than average, where they're not even breaking even.
They'll win a few purses here and there, and those revenues wash out the maintenance costs of the other horses, and then maybe you get one that just breaks out.
Exactly.
Yeah.
And so I would say that
Yeah.
most people that own racehorses are somewhere around break even.
Yeah.
They're losing 5%, they're winning 5% of their investment every
Yeah.
year, but they're not doing tremendously well or tremendously poorly. And they do it because they
Yeah.
love it. They do it because they love
Yeah.
horses, they love being involved in the sport, they love being able to see the horse before the race and going to visit the horse in between races. My kids used to love going to visit the horses. And so I think that's why most people do it. And I think that's the best reason to do it. Now, there's certainly the elite horse owners that own the horses, the $1 million horses, the $5 million horses, the $10 million horses, the ones you see running in Preakness and running in the Kentucky Derby, where they are stacking the odds in their favor by owning really expensive horses.
Yeah.
Basically, the monthly cost for a horse is going to be pretty much the same, regardless of whether you buy a $10,000 horse or a $10 million horse. The cost to house it, to feed it, to train it, to take care of it is going to be about the same.
Yeah.
But that $10 million horse is going to be running much bigger races and winning much bigger purses. If you buy a really inexpensive horse, it's really hard to overcome just the expenses in the races that it's going to be running, even if it wins those races. Winning a $5,000 race once a month when your expenses are $5,000 a month just isn't long term. So what I tell most people is, no, horse racing is not great from an investment standpoint. If you're looking to round out your portfolio with a good investment, horse racing isn't it. But if you love the sport, if you love horses, if you would enjoy going to be able to visit the horses and watch the races and be in the winner's circle, then yeah, there's opportunity to invest with other people, to invest through syndications, and really be involved in the sport without being hands-on.
Yeah. I would think that like the big money is also the big risk in that, like, to make the real estate analogy, I'm going to go build an apartment building in the center of downtown Austin or downtown Charlotte or whatever it is. That is like, I know there's high need. I know there's a lot of money to be made. It's a low cap, high barrier to entry market, whatever you want to say. And so that would be probably trying to breed a horse that maybe would one day win the Kentucky Derby or something like that. It's probably the biggest, maybe smack it at the park thing, but you'd also could certainly swing and miss because you could breed the wrong horse or have a horse that didn't quite work out or whatever. Love your analogy on comparing it to real estate with regards to fix and flips, rentals, drawn-up development, those kinds of things. So good stuff. Well, guys, listen, this has been probably one of the longest Cash Flow Digest shows. I want to model maybe after the Drunk Real Estate Show where you guys just get in there and talk it out until it's done getting talked out, right? It's an couple-hour program if it needs to be. So
we're doing this because we love it, right? I like talking to you, Matt. Hopefully people are enjoying it. But I'm doing it just because I like talking to you.
I know, right? We just talk shop, right? That's a good podcast. It just sounds like two guys sitting down having coffee or having a whatever, right? For your show. Well, listen, how do people that want to find out more about yourself, about horse racing, or about bar-down investments, or anything else that you guys want to talk about, how do people get in contact?
Yeah, jscott.com, JSCOTT.com, and that'll link you out to everywhere that you might want to find out about.
jscott.com. You can hear all kinds of great stuff that Jay Scott's up to, including the phenomenal work that Bar-Down Investments is doing in the real estate world of all things there. So, Jay, always great to talk to you in general. And so I was looking forward to having you on the show for a long time. We'll have to talk about other things next time we have Jay on the show.
Anytime.
I'm going to just drop a hint here. Not every real estate investor can say that they played in the World Series of Poker. Jay can. So we're going to talk about poker, talk about maybe how poker relates to real estate investing, all those kinds of things next time we have Jay on the Cash Flow Digest. Jay, thanks for joining us today.
Thanks, Matt.